average American. Holy shit. Yeah, you guys saw me this morning. But this episode is going to be aired separately. So I'm still wearing the same shirt. It's fine. You guys won't remember, but you can't get this shirt because I made it for myself. Anyway, this is a special episode. We're going to start kind of doing some themed episodes where we bring in some of these experts in certain fields for things that you probably need, for things that I would say a lot of people think that we're just supposed to know and no one knows shit about it. So I am joined with Sean from Guaranteed Rate.
Thanks for having me.
And are you a loan officer?
My title, Guaranteed Rate loves fancy titles, is the Senior Vice President of Mortgage Lending.
Oh, wow.
Yes, I'm a loan officer.
Oh.
I'm a mortgage advisor.
Senior Vice President of Mortgage Lending.
Correct.
That just, they're making you spend more money on business cards.
Yeah. Well, I don't use those anymore.
In there, just, it could just be LO.
Yeah, but agreed.
Anyway, you're here to talk to us about VA loans specifically, which again, these are some of those things that you don't really learn until you've fucked it up, really.
Yeah.
And then somebody 3 years later is like, wait, you didn't know that you had access to this, or you were offered this, or you could defer payment for this. Dude, it's all in the VA. And you're like, what? Where the hell is that newsletter?
Yeah, how would I have known?
Because I didn't get it. So yeah, Sean, walk us through. Let's start with first-time home buyers. So let's bracket this out. Let's go. We're talking to someone that has never owned a home yet. So let's talk about the process. Let's talk about the benefits. Obviously, you know the benefits. You're gonna 9 times out of 10, a mortgage is cheaper than rent.
Yes, more
if
so.
Not 11 times out of 10.
More and more across the country than ever. I'm from California. That used to be kind of true all the time.
Yeah.
And we're finding that everywhere now. So for me, what I noticed, I've been doing this 20 years now. And what I noticed.
20 years?
20 years.
God, how old are you?
I will be 40 next month. About to come up on 40. About to come up on 40.
Dude, I thought he was 23. I was going to make a lot of jokes about him being super young. And
that works.
My mind is, I'm sorry, I'm kicking us off the rails, but I'm like.
I got my first kid off to college in August.
Damn.
I'm done. Yeah.
This is the best looking 40-year-old. What's it, him and Tom Cruise? Scientologist too?
Yeah. Maybe I should start.
Awesome. All right.
Yeah.
20 years you've been
20
at
years.
this.
So
Wow.
the first, I'd say 15, 16 years, I was behind the scenes. I was the guy that loan officers called when they messed something up or needed to figure out how to put something together. And I was a little bit ignorant back then, but VA always had this stigma to it. And I thought people were getting overcharged, right? So you guys are getting overcharged, and that there's things that have changed since then. But as I jumped onto helping people directly, I didn't realize how little education you guys get when you get out.
Yeah.
And so there's ignorance on the veteran side. And even if you're active duty, you can use it, right? You don't have to retire before you can use your benefit.
You make me think about that. I was in for 15 years.
Mm-hmm.
I'm sure they exist, and I'm sure some people will you didn't use your resources, but I don't think once in my military career did anybody go, hey, someone's here at the unit to talk to you guys about your VA benefits with in regards to buying houses.
Or anything.
Yeah. I don't remember that one.
Because the more I've asked, the more I'm finding it to be just and maybe when you're leaving, it's such a transition that so much is happening at once. So I kind of set a new goal I want to make sure everyone's educated, not just you guys, but also the real estate community as a whole, because that's where a lot of, I think, the misunderstandings come from is more like the real estate side, because the benefit's pretty simple. You get 100% financing. You can, when you get out, the first thing I tell people to do is if you're going to file for disability, make that number one, because if you have 10% or more disability, the VA charges a fee to use your benefit. If you have 10% or more disability, that fee is waived forever. So I encourage everyone to do that kind of right out of the gate if you can, because it saves you a ton of money. But it's really a simple loan, and people just don't know what to ask, don't know what to look for. I think one thing that happens is it's because people don't know what to ask, you just get given what somebody thinks you should have. And that isn't always the best solution. So it really just comes down to going through the process. It always starts with a loan application. I don't care what type of mortgage you're getting, you have to apply for it. Because the VA, you don't get the loan from the VA. You go through a company like Guaranteed Rate.
Yeah.
I mean, any company can do it.
It's a VA.
It's a program. It's a program. Yeah. So effectively, a company like us, Guaranteed Rate, then sells the loan to Ginnie Mae, which is who holds VA loans. So you start with the loan application. You look at credit. You look at your income for whatever you're doing now. If you do have any VA benefits that are providing income, we include that. And then you're looking at your assets, your bank statements. Do you want to put money down? Do you not want to put money down? What do closing costs look like? All those things. And I think that's one of the first places it goes wrong is overall, I'd say loan officers here's your form that has all these fees on it. And it's just, there you go. And you're like, well, shoot, I don't know what any of this means, but I don't want to sound like an idiot. So I'm not going to ask. And I'm just going to trust this person I met and hopefully it works out. And I think that's kind of where it starts to go wrong is right there.
Okay. Let's back up a little bit. Let's pretend we're going after right now a young person that just got in the military, 18 years old. They're in the barracks. What could they be doing between the age of 18 and 21 to set themselves up to the second that they promote themselves out of the barracks or the second that they're afforded to go off base, that they could be buying their first house? That's a great question. What are things that they need to be cognizant of focusing on? What do you got for them?
So credit, build your credit first. So open up a credit card. If you have an auto loan, something, right? Just something, pay it on time. Like that's kind of number one. You don't want to not pay your obligations. So pay it on time. And then if you do have credit cards, you want to keep the balance basically at 30% of the limit. So if you have a $10,000 limit on a credit card, you want to keep it at $3,000, no more. The way the credit scores are reading now, that almost has a bigger impact than paying on time because they want to see that you're not abusing credit. It's a tool. It's not something that I need. It's just something that I use to get my airline points and whatever else. Yeah. So credit, I would say, is number one. And then saving money. I mean, you gotta, it is zero down.
Yeah. What would look great? How much money coming to the table for your first house? Yeah. Like, let's give them goals. If we're starting somebody out correct, what would you love to see them walking in at 23, 24, 25 years old? What situation do you want to see?
Good credit, number one. And then have $20,000 saved. You don't need that much.
But to have it,
even seven. It's going to vary across the country depending on price points. I'm from California. Everything costs $1 million.
Yeah.
So it's going to depend because your closing costs. So you're not putting money down as a down payment, but you still have closing costs that are associated with buying the house. You have to have money to cover those. And there, of course, people are like, oh no, you don't have to have any money. That's true, but the way they do that is you take a higher interest rate to get the credit to cover that.
Yeah.
And they just tell you. So my industry is really good at telling people what they want to hear. Houses are free. Yeah. And you're like, well, that's great. If you use that credit, you're paying a higher interest for 3
months. Like no mortgage for 3 months. I've seen that. Which again, to people, wait, I wouldn't have to pay rent for 3 months. Like I got to buy the house.
Right. But the way that works. And so sidebar on that note, because that is another gimmick I see a lot is skip your mortgage payments for 2 months. It's a pretty typical thing to see in an ad. The banks don't give away money. Like you're paying for it. The way it works is we're in June. If you close today, your first mortgage payment would be August 1st. You don't make one in July. And then you have the rest of this month remaining where you don't make a payment. So it's like, sweet. It's June 15th, moved into my house, lived in it for 45 days, didn't make a payment, right? Where with rent, you got to put the 2 months up front.
Yeah.
The payments are just, when you make that first payment, it's paying for the month prior. And then they collect the interest for the month you're in through closing. It's one of those closing costs that I think you should have money for. So that's kind of one of my goals is to get rid of a lot of these gimmicks. These salesy things that
are confusing people.
I think it's misleading people, right? Like it's not free. Yes, you're skipping 2 mortgage payments, but explain to them why they're skipping 2 mortgage payments. Don't just make it sound like it's free money.
Yeah. Yeah. So let's continue to shape and let's just set the bar. 25-year-old. That's a great position to put yourself in, especially if you're young in the military. By the time you're 25, you're E5, E6. you're really kind of getting some income at that point. So we've got $20,000 in the bank, good credit, not spread out everywhere. So let's talk about that. Like, you can't have 60 cards open all over the place. A Macy's card, a GameStop card, a Best Buy card. Everybody tries to get you to get their card now.
Yeah, I would just do 3. Like, keep it simple. Three's plenty. 3's plenty. Manage them well. When you have a bunch, that's where people forget to make payments. Right?
I've never had more than one. Well, I mean, when I was young, I did. I had the military star card. And
the reason I say 3 is for other loan programs, they'll require you to have 3 trade lines. So really? Just as it's kind of counterintuitive. Like, wait,
it does. It does seem crazy.
You won't give me money unless I show you that I have a bunch of money outstanding.
I had this happen to me when I went to buy a place here in San Antonio 2 years ago. I have lived debt-free for 5 years. So it's like when they went to look at me, they couldn't find anything.
Yeah.
Like, because I had also either lived in a corporate rented house, or I lived with a friend and paid him. So like, then they couldn't even find anything as far as for me in records of paying rent or anything. Because even before that, it was strictly by owner. It was my buddy. I was renting my buddy's house, so I'd transfer him money. So there was never any real record. They're like, we don't see you. We don't want to give you money. But I'm like, what? I have no debt, though.
Right. They're like, exactly. That's why we're not going to give you any money. Yeah. No, and that's why it's counterintuitive. So 1 is great. Like, you could have 1 credit card that you manage really well. You make the payments every month. You keep that balance at 30% or less of your limit. So if you're at 10,000, keep it below 3. Your score will rise really fast, because that's showing the credit scoring models. I don't need this card.
Anything above 600, you think is pretty good when it comes to coming across your desk?
I would aim higher. Yeah. I'd say 7's the new 600. Yeah. Like 7 is the new 6. And that's how you get it. You can have a 100-point swing in credit just from having your balances be too high. So if somebody has a credit card maxed out and then they pay it off or they pay it down, you can have the score pop by 100 points in 1 month. And so when I say that, I don't want people to run off and do it, because paying something off, could not hurt it, but it won't have the same impact. So it's like, you want to work
makes
through.
No sense.
I know.
Like, why not completely refab the credit industry of like, dude, you guys have arbitrary guidelines. Like,
well, a lot of these changes came after 2008. So on the credit side of things, it was make your payments. Like, we don't care how much debt you have, as long as you pay us, who cares? Then 2008 happens, everyone's way over leveraged. So having your score be based on having, lower balances meant you weren't going to be over leveraged anymore, because everyone's obsessed with their credit score. Like, everyone loves bragging about that number. And you can use an app like Credit Karma, or what's the one that John Cena's Equifax. Like, there's a billion companies that will show you your credit. But
FICO score.
Yes. There's 3, FICO, TransUnion, Equifax.
Got it.
So you just want to make sure that you're working towards it, right?
Checking mine right now. We're going to broadcast it as soon as I see it. Okay, so a 25-year-old, 3 credit cards, 10% of the balance, $20,000 in the bank.
That's a high number. Yeah, you don't need that, but I would say that's a good goal.
It's a good goal, because then when you get to the stage of purchasing the house, you do want to put some down.
Well, you don't have to put it down.
What is this horse shit?
Dude, look at you.
Yeah, but it was 843 last month. So it's 822.
So then a balance increased a little bit. That's all that.
But that's what that would be. You're telling me this because, like, I do have one. I mean, I have an Amex for my business, which has no limit. Yep. You just have to pay it off it's a charge card, not a credit card. But my credit card only has a $12,000 limit. And like, if something's 10 grand or something, I'm like, I'll put it on this. And it'll max out, and then I'll pay it off.
Yep. That one moves it. Amex doesn't even rate because it doesn't have a limit, so it's not reading the same.
Really?
Yep.
But you would think that, hey, this guy has had an Amex for 5 years and it pays it off every month. You'd think that would score higher.
Well, and it does. So what was yours? 822? Yeah. So I always tell people 750 to 850 is as good as it gets. Like, I don't care if you have an 850 or a 750. There's no.
I want the 850.
I know, because it sounds cool. So then when you're at the barbecue, you get to brag about it.
It better not be higher. Good. Did you check yours, Matt? Damn it. Better not be higher.
I think you guys all got me beat.
It's going to be what?
I got my equity line going, and that one, when that inquiry for the equity line dropped it a little bit for a couple months.
Damn it.
Which is stupid, but that's how it works. So 25-year-old. So what I would say, if I went back, so I'm 40, had a kid when I was 21. If I could go back and do it again, the advice I give the younger people, don't have kids, don't have a wife, like just starting out, you can use your VA benefit to buy a multi-unit property. So you don't have to buy a single family. You could buy a 2-unit property. You live in 1 unit, rent the other one out, have that cover your mortgage.
Take the burden.
Yes.
Put all that money in savings.
Yes. And you could do a 3-unit, up to 4 units, right?
Wow.
So if I could do it over, I would have bought one of those.
Say that really loud right there. Up to 4 units.
Buy a multi-unit property with your VA benefit.
Yeah.
Out of the gate.
A 25-year-old buying a 4-unit fucking
with
property.
0 down.
That would be great.
Yeah. So me, civilian, I have to do 25% down basically. Okay. Right. So, and going back to the 20,000, because that's where people are going to be like, he's wrong. You don't have to have that much money. You don't want to go into a house being broke either.
No, because
right, like
anybody that's bought a house,
be comfortable.
The second closing happens, the fucking washer's out.
Right,
and now the water main.
Mine was water heater. Yeah, I had a few. So it happens.
Yeah, I had a full AC unit go out. I had the entire AC unit with the entire central heating and air was improperly installed. It was a $17,000 bill.
Yeah,
for them to go in and fix it. And guess whose fault it is? Mine now, because I've owned the house for a few years and didn't realize the home inspector didn't catch it.
Yeah.
So.
And if it was on the home inspection from 3 years ago, now what? Yeah, right. But things will come up. So, my little slogan is home loans for your lifestyle. I don't want anyone to be house poor. And so don't scrape. I mean, if you scrape together money to buy a house and you buy a house, great. But start saving after that. Like keep paying those cards on time and make sure that you're building. Because that's what we want. I mean, if you can start at 25 years old, you buy a couple unit property, you do your thing.
Yeah, you're essentially, even if you broke even, to not pay a mortgage or rent.
Right.
Think of you guys when we all deployed. Like for the single guys that didn't have to leave a house behind. Like that's a lot of money. That's $1,200-$1,500 a month that is back to you. That starts saving quick. You blink an eye, 3 years later, oh shit, I got $70,000 in the bank.
Right. It builds quickly. The whole compound interest concept, I guess now that I'm 40, you really realize how quickly that can work in your favor, right? So hindsight being 2020, there's a lot of things I would have done different that I'm encouraging like the next generation to do.
Yeah, and that's what we're here to do today.
Yeah.
Start you off
Get it right.
fresh and good. But I mean, that leads us to another category. Somebody that currently owns their home already, but maybe didn't do it properly, didn't use the VA. What are their options here? So
you can refinance into your VA benefit. And that's where I look at it from all sides. So if you don't have the 10% or more disability, the VA funding fee kicks on a refinance and it can be a little heavy. So I'll look at that. So let's say it's 2.3%, right? So on $100,000, that's $2,300. So you're paying $2,300 to use that benefit, right? Well, could I use that same amount of money on a conventional loan to get the rate lower, right? So, I can use that money in a different way. So that's where it kind of becomes a comparison. But if you used your VA benefit to buy your house and now you want to refinance, it's just to lower your rate. They call it an interest rate reduction loan. It is the easiest refinance on the planet.
Really?
Oh, it's not. It's
so if you currently have a VA loan and you want to refinance because interest rates are low right now. Like lowest they've ever been.
Pretty much.
Okay. So now is the time.
Yes.
All right. Talk us through
Go get that money.
What do we got to do?
So that one's simple.
Do we call you?
Yeah, sure.
Do we call Sean?
Call me up. Yeah, absolutely.
Fucking call
I'll do it for
Sean.
you.
Get him on the phone. It's Christmas at Sean's house. He's handing out loans with guaranteed rate. That's right. Are you on your 9th divorce and you want a lower percentage on your home loan? Call guaranteed rate. Ask for Sean.
I love it.
Now.
Your 9th divorce.
Yeah. Don't hate.
So basically an interest rate. So I'll back up a little bit. Compared to what I go through not having a VA benefit, the documentation I have to provide every single time is my pay stubs, my W-2, my tax returns. Some don't require that. Bank statements. I have to start that process all over. With the VA interest rate reduction loan, if you're paying off your existing VA loan, you don't provide any documents. They run your credit because they want to see that number, but they don't look at what your debts are. They're just looking at the current mortgage, and that's it. It is the simplest refi you can do. And it's more common sense. VA guidelines, either side, for your purchase loan or for your refinance loan, it has more common sense than anything that a conventional mortgage would have. So for conventional loans, they use something called a debt to income ratio, meaning if you make $5,000 a month, you can have a total of $2,500 in monthly debt, right? So 50% of your income. The VA doesn't follow that. And I've never understood the debt to income ratio guideline because it's kind of arbitrary. Like, you make $50,000 a month, 50%
you're spending
left over is a lot.
$25,000.
Well, they'll let you, but your residual, let's just say you were, you still have $25,000 left over. If I'm at 5, I have $2,500 left over. So how is that 50% number relevant? The VA uses a residual income calculator to where they're saying, and it's a low number. Like, they'll let people take on more debt than I think they'll want. But it's a much more common sense approach. So it's an easier, I should say simpler. It's a simpler loan than anything I would use. So I was the guy behind the scenes until January 2017. January 2017, I jump onto helping people directly. And the first veteran I helped, I basically went through it. I'm like, I'm just going to go join the reserves because I want to use this. But you have to be in the reserves for 6 years before you're eligible for it. So I was like, well, that's not going to work. I'm too old anyways. So it's great. I mean, I was truly looking into joining the reserves because the benefit works so well.
Yeah.
So the refi is simple. Like, I can't really even give you more than that because it is that simple.
Yeah. If someone's listening right now, they have a VA loan, they just go to the website.
Go to SeanHerrero.com.
Yeah. Is that what it is?
Yeah, that's mine.
Sean, you can do it. You can just do it. Well, this makes it easier.
I want to help everyone. SeanHerrero.com.
Dave, can you put a thing, it'll have a sparkle?
Sparkles, perfect.
Fuck yeah, I want some sparkles. Now I want to go fishing. Dave, take me fishing.
I'll go fishing.
You do go fishing, don't
you?
Let's
go. I do go fishing.
Where do you live?
I live in like San Francisco area.
Really?
Yeah.
Really? Mm-hmm. What part of San Francisco area?
Danville. It's 40 minutes east of San Francisco. Walnut Creek.
Oh, that's like going inward.
A little bit.
I'm from Novato.
Oh, you are?
Yeah.
Okay. I was in Petaluma for an archery event on Saturday.
Nice.
Yeah.
Petaluma's nice.
Yeah, right on. I did not know that.
Old San Rafael.
Yeah.
Yeah, we used to go to the little model shop in San Rafael and just oogle over the like airplanes that you could like remote control airplanes. Like, I'll never get one of those, but they're so cool. That's what I remember.
The
about
gas
San
ones.
Rafael. Yeah. Oh,
yeah. Nice.
Gas powered.
The real ones.
Damn. Caleb, did you know with Black Rifle Coffee's Coffee Club subscription, you can get fresh coffee shipped to you every month? What? You don't even have to go to the store. Whoa. You don't even have to leave your bed.
What? Wow. How did you get in here? You might want to go ahead and join the Black Rifle Coffee Club subscription before one of these guys shows up at your place.
Anyway, so they can go visit you.
Yep.
Say, I want to refinance.
Yeah, or just help me.
How long does it take?
Like, I want to do this right.
Yeah.
And because a lot of times, so my mentors like really become like a big brother to me, was a SEAL, and he lives where I live, and he was buying his house, and he's like, hey, I'm going to go use this loan because it's like California's version of a VA loan. It looks better. And I read through it and I'm just like, it's not better, it's just different, right? So, but here's pros and cons. So make an educated decision. All I want anyone to do is make really educated decisions. And you can't do that if you don't get the information.
Yeah.
And the bigger thing right now with the way the housing market is just getting your offer accepted. And that's where I think the realtors need education.
Yeah.
Because they're turning away veterans. Like,
really?
I'm going to call it discrimination. Like, truly, from my experience, if it's a VA loan, they kind of don't give it the validity that they would.
Why?
Because they don't understand it. Because they think it's something it used to be. So a long time ago, the appraisals were more strict because we have to do an appraisal of the property to see what the value is. Yeah. That's the collateral, right? Can't get a loan on something we don't know what it's worth.
Yeah, $300,000
no different than a
loan
car
for something that was worth $75,000.
Right. So they're going to do an appraisal. The VA requires a pest report. They want to see that there's no like infestation, no fungus, no bugs, no termites, basically.
Something that'll just wipe the property.
Totally.
out.
Yeah. And so the VA requires that, but due to COVID, so the pest clearance normally is required to be done before you close. Due to COVID, we don't want anyone in this house. The veteran has, the VA gives you 12 months to show that you've made those repairs. So, hey, that one's off the table. Like seller, you don't have to worry about anyone coming to the house. It's a level playing field. The VA says 12 months. Company, like guaranteed rate, we say 90 days because we're the one responsible for showing that it was done. So it's like, how do you manage that for 12 months?
Yeah.
So we say
difficult.
90 days. What's the third thing? Oh, and the third thing is they think that the seller has to pay the closing costs, which was a rule, I would say pre-08. If a lender was charging you more than 1%, then the seller had to pay those closing costs. But nobody charges. Like that went away.
Yeah.
So it's not really, it doesn't matter anymore. But these are what are stuck in their head. So every time I have a client make an offer, call the listing agent. I've driven to them and like, look, I have a veteran making an offer. They haven't submitted it yet. What concerns do you have? And let's just knock it out right now. Because that's the hardest part right now.
Yeah.
Like I had a client just move from California to Texas, and I never thought we'd have that problem here, same deal. I mean, to where he goes, look, I'm just going to say I'm using conventional financing on my offer because he could.
Yeah.
And then he's like, and then I'll use my VA benefit. And that's what we did because he kept getting turned down because it was a VA offer.
Wow.
Terrible.
That is very weird. Well, to the realtors out there, listen up.
Get your
Sure,
shit
there's
together.
plenty of you.
Yeah, no, but it is. It's once I educate them on it, they're like, oh my gosh, I never knew. Because I think people, what started to bother me was thank you for your service on 9/11, Memorial Day, 4th of July, and Veterans Day, right? Thank you for your service all over Instagram. We have an opportunity to do something, and then you don't give the offer credibility. And they'll say the seller didn't want to look at it. I'm like, how does the seller know how VA loans work?
Yeah.
Like they've done this a couple times.
And why would that matter to any seller unless you talked them out of it?
Exactly. Because you're the one you're the one giving them the guidance.
Hey, this person wants to buy your house. Cool.
Yeah.
Hey, this person wants to buy your house with a VA loan. Cool.
What's that mean?
That doesn't change. So yes, it's
Well,
a realtor fucking it up.
Right. And it
Fucked up realtors.
agreed. So I do little
They're the
videos.
enemies.
I try and do like VA tips every Friday. So like Red Friday themed VA tips on just saying here's how it works. And I recorded one where I just called the seller, talked to the listing agent, and I was just like, look, here's how it works. If your client wants to hear it direct from me, I'm happy to call him right now. Called them, had a great conversation. He asked a bunch of questions. Offer accepted like 10 minutes later. And I think there was 5 offers on that house. And yeah, that was it. That made all the difference in the world. So I just recorded that call and I just put on YouTube. So I don't know, man. It's not rocket science. It's just, it's ignorance. And like, I don't mean ignorance as like a negative. It's just a lack of understanding. So that's why I say everybody needs to be educated so you can make an educated decision. That's it.
All right. So if someone decides tomorrow they want to purchase a house, let's pretend we don't have, the situation we're in now where you're battling a bunch of offers.
Mm-hmm.
How long does the process take for you to pre-approve or just gather everything from them to give them an idea of what they can afford?
It takes me a day. So I would do that in 24 hours, basically.
So people that may have never thought owning a home would be in the cards for them could go to your website and within one day, you could tell them up to what they could get approved for.
Yes.
By utilizing their VA benefits.
Yes. And what I try to do with that, so there's different ways to do that too. So some lenders will say, you're approved. And you fill out a loan application online, here's your approval. But they didn't look at your income documents. They didn't look at your bank statements, the credit report they have to look at. And I'm like, well, so you're just saying they're approved based on the numbers they typed into the internet? Like, you got to verify that. So I won't issue the approval letter, the pre-approval letter, unless I've reviewed those things because I want people to know exactly what they're getting into. And then it's not necessarily what the banks say you can afford that matters. Like, what do you want to afford? Like, what's comfortable?
Yeah, that's my next question is, are you giving them a comfortable like window of what they could afford when you pass it back?
Yeah.
Hey, 300 is your max. You don't want to go above that. It's going to be too stringent on your family income.
Basically, so what I do is I build everyone a live website. So it's a personalized guide. I call it a buyer's guide that shows them 3 different price points because I want to have a range. Where's your comfort level fall in here, right? Because especially with the VA loan, they're going to let you borrow way more money than I think you're going to want to borrow from like a monthly payment perspective. So where do you want to land? Like what feels good? What feels comfortable? Because I don't want you to be house poor. And so we find that number and then it's like, okay, cool. Now we're good to go. Let's go. Now we got to go get the house. So it can be a very quick process.
How long does it take from start to finish to do the VA refi?
I'd say right now, probably 30 days. I mean, if you asked me that question November of last year when everybody in the entire country was refinanced, it was like 60 days.
Yeah.
But now
So
it's
about
quick.
a month.
It's quick because we're not
for
doing
someone
anything.
that may have a high interest rate right now that can roll in and take advantage of the market being really low as far as interest rates goes.
Yeah.
What are some of the things you've saved people as far as a monthly payment lately with a refi?
I mean, it can be a lot. It can be like hundreds of dollars. I've had some be thousands.
Really?
But it depends. Again, most of what I do is in California.
Yeah.
But it can be a big number. And that's the other thing we look at is, that brings me to another topic.
Yeah.
We want to make sure it's worthwhile, right? So the VA, there's predatory lending is something that was put in place, meaning lenders are taking advantage of somebody.
Yeah.
Right?
Hey, you could afford that. I mean, predatory lending is generally the Ford dealership right outside an Army base.
Oh, okay.
You need this Mustang. You need this Mustang at 34% interest because it comes with a full tank of gas.
There you go.
And seatbelts in the door.
But this is worse. So there was a company that was got in trouble by the VA. They would basically use that VA interest rate reduction loan. And they would refinance people like every 6 months over and over and over again. And the way they were lowering the rate is they were building the points, the discount points. You're paying a percentage of your loan amount to buy that specific interest rate. They're just rolling it into the loan amount. So going back to the gimmicks thing, hey, we can get you to this rate with no money out of pocket.
You got a 2.1% rate, but you owe $40,000 on your note.
But they don't notice. It's, oh no, that's just how it works. We just roll the cost into the loan. And that's totally fine. Like I roll costs into the loan all the time, but understand how, again, it's not free money. Yeah. Like the no
You're
cost,
paying
all
for
this.
it somewhere.
Yes. So, and it doesn't mean it's a bad decision, but they were doing it to where the VA requires 6 payments to be made and 180 days to have passed. So basically 7 months, because it has to be from your first payment before you can do it again. And this company got cut off by the VA for doing that.
Wow.
And so that's really, again, I want to get rid of all the gimmicks and nonsense and make sure people like get it done right.
Okay.
And position themselves right.
30 days for a refi if they contact you. 24 hours for just a pre-approval to look at this. All right. What about veterans with bad credit, divorces, things like that, child support? I'm just listing the things that we all have, gentlemen. Sorry. Child support, alimony, bad credit, left with debt, things like that. What are options for them?
So I will always, if somebody has bad credit, my first goal will be to improve their credit. I don't want to give you the loan that's tied to that score, right? If we can improve upon it, let's start there. Alimony, child support, all those things build into that debt to income ratio I was talking about. So we're taking that into consideration no matter what. But the low credit score number, you can have a 580 credit score and get a VA loan, but we want to make sure it's worth it, right? So if we take these small steps to improve the credit, hey, your score's lower because you had some lates and some things go wrong because of the divorce, but your balances are super high. So let's pay these down if we can, get that score up.
Close a couple accounts.
Yep. Let's clean things up a little bit and then make sure it's in your best interest. So, and then again, I don't want to do any of that. I like this score and I want it now. Okay, great. We can do that. But it wasn't assigned to you. You made a choice. So that's the goal there. But you can make those things work.
So give me some examples of horror stories that you've flipped, because really what's going to connect with people right there is you just gave the kind of guidance. Someone is going to be like, oh, well, I'm way too far gone for that. So what are some situations you started with, and where'd you get them, and where are they sitting at with a house now?
So I helped a guy in San Diego. He had a VA loan on his current home, and he was planning on retiring. He's going to get out of the Navy. And then they found a house they absolutely loved, like 6 months later. So what we started with was, hey, Sean, I want to free up my VA benefit to buy my next house. So let's refinance the house I'm living in now using conventional financing. once that's done, your VA entitlement, that's what we call it, VA entitlement kicks back in. So we did that July of last year. He found this dream house like 6 months later, and we used the VA benefit for it, but we were squeaking by on this one. Like the house was really at their upper limit from the qualification perspective. We had to rent out his current home to get the income to offset, right? The realtor, she did a good job, not a great job. There was, the house didn't have any inspections done, that termite report we were talking about. She's like, whatever, we'll figure it out later. And I'm like, I kind of wish we'd figured it out before we put it in, but it worked out fine. Yeah. So it could have been bad, but there was a bunch of little things that could have gone wrong, and it all worked out perfect. And so I talked to his wife last week. He deployed in March, and I'm like, how's the house? She's like, it's perfect. I love it. We have money. We're making money on this house over here. Like everything worked out great. I don't really have horror stories.
I want a disaster. Who came in with like a 320?
I don't have any.
Nobody.
I don't have horror stories.
Credit score.
So when I have that, I'd say mid fives is my lowest. Okay. And so what I do in those situations is I run the credit. There's a tool I can use to go, hey, what if we this? What if we that? Right? Just like kind of play with it. And if I can fix it, I'll tell them, look, these are the things we've got to do. If I can't, I refer them to a company that specializes in fixing credit. And they don't. So that's a whole nother scam. I shouldn't say scam. That's a whole nother thing that can happen, where people charge you a bunch of money to fix your credit and they don't do shit. They don't fix anything. But you still paid for it all. So this company doesn't charge like that. And he's super good at what he does. And he's just like, look, this is what we have to do. And a lot of what they're doing for credit is companies are required to keep records for a certain amount of years. Oftentimes they'll get rid of those records early. If you can't produce the records to show this person had a late in what year is it now? In 2016, you got to remove it.
Yeah.
So that's really kind of it's like a legal game they're playing.
Yeah.
But I've had people go through that, and it made all the difference.
Really?
So yeah. So
what's the most you've seen a credit score improve once you identified it to them and then they worked on it for
I'd say at least like 100 points stands out in my mind.
Really?
See, and that's the hard thing is I don't really pay attention. I'm so problem solutions. I don't really pay attention to it now works and we're good. Like everything we wanted to do worked. Let's go get your house and be done. Okay. I like always forget the little critical details like that. So
what are some absolute no-nos to stay away from during closing?
Don't open up new credit cards. Don't.
So while you're awaiting your closing date, don't go fuck off.
Yeah. No. Yeah. It's not like don't go celebrate like, hey, we're in. I mean, the biggest thing is probably people opening it. Okay, cool. We got accepted on this house. Now we need a credit card for the furniture.
All the house shit.
Yep. Yeah. Yep. So we'll just go open a credit card at Best Buy and buy all this stuff. And then we go, oh, hey, it looks like there was an inquiry on your credit report. What's Best Buy? Oh, I opened a new card. I bought like 10 TVs. Oh, well, now you don't qualify because your monthly payment
shit. Have
is
you seen that happen?
Once a long time ago.
Damn it.
And it was a good story.
Yeah.
But it wasn't VA. This guy he was closing on like a multi-million-dollar house. It was either a Lamborghini or a Ferrari. I got trolled on Instagram the other day for saying this, but it was either a Lamborghini or Ferrari 2 days before he was closing, and the payment was too high and he didn't get his house. That was like 03, 04, I think.
Well, that was
a drastic one.
Expensive purchase.
And you're like, how often would that happen? And then a couple years ago, I had a client who I helped. I helped them buy their house. We did the credit repair stuff. What was theirs? Theirs was probably like 120 points. So we did all that, got them into the house. We're refinancing to get him into a better mortgage. His wife calls me like panicked. She's texting me, and I was on vacation with my wife, and I'm like, I gotta call her real quick. She's like, you have to call him. He's at the Lamborghini dealership right now, and I'm like. No. He was going to save like $1,300 a month. And I called him and I'm like, please don't buy that car right now. Like the money you're saving on this refi, we'll pay that payment. Just get it later. Don't get it right now. You're going to screw everything up. Yeah. But I was like, what are the odds of it happening twice with these super expensive cars? No, I shut him down.
You got him.
I think I shut it down entirely. I don't think he ever bought it.
Thank God. He didn't need that Lamborghini.
No, nobody needs a Lamborghini.
No, they don't. You don't need to buy a $550,000 car to go 60 miles an hour.
Right.
But Tesla will get to 60 faster.
Yeah.
And it's much cheaper.
Yes. There's no Teslas out here. I've
There's
noticed
some.
Because gas is so cheap here. You don't need them.
Yeah.
They're a dime a dozen.
You got to think about Texans too.
Yeah.
You know.
Yeah.
Yeah, people that wear cowboy hats don't drive Teslas.
That's true.
Generally, people that wear cowboy hats have to haul shit.
Yeah, for
like
sure.
Hay.
Have you seen the Teslas with the trailer hitch?
No.
I see them all the
I
time.
don't even want to know about it.
Yeah.
Whatever is going on in Silicon
What are you
Valley
towing?
over there.
What are you towing
What's
with
your
that?
house? How many houses do you have?
I just have one.
Really?
Yep.
Why the fuck don't you have like 80?
Because I'm learning as I go.
You're 40, Sean.
I know.
What
I
more
know.
learning is
I
there?
know.
You're retiring
I'm having
in 3
kids all the
years. You're
time.
done.
I'm having kids all the
Your
time.
kids are graduating college.
Yeah, I need to buy more. I do need to buy more houses. I just bought, so we were sold my house in 2019. We were going to move to Southern California. Actually wanted to move to Texas. That got
Why
shut
are
down.
you still in California?
I was asking myself that question coming out here. I didn't know there'd be so many oak trees out here.
Highway 37.
Yep.
Ugh.
That's still terrible.
Yeah.
Yep.
Scary.
Always.
A lot of people die on
Yep.
that.
I don't know. I don't know why I'm there, but
Marine World still there
yeah, no more animals though.
in Vallejo.
Yep.
Yeah.
Yeah. Everything just
Is it
opened
Six
up.
Flags now, isn't it?
Six Flags. Yeah.
No
They still
more-
call it Marine
It's
World.
not Marine World.
They call it.
So
I think
they don't
they call
even
it.
have sea lions or nothing.
I haven't been there in a
No.
long time. I think it's all roller coasters now.
My childhood has gone down in flames.
Yeah, that was the spot.
Fuck. Yeah. Again, why are you still there?
I don't know. Everybody always says the weather,
You don't get
and then you have the
like guaran-
fire. We have fire
Yeah,
season now. Like
fires.
that should be-
Guaranteed rate didn't come in and like, hey, you've worked with us for 20 years. You qualify for a cool meal.
No,
Why not?
no, things don't work like that.
That's
in my
horrible.
world.
That's shitty.
Will you talk to him for me the
I
next
will.
time you do?
I'm
All right,
gonna
thank
ask the owner.
you. Yeah, get on him.
The president.
Victor, just take care of this one guy.
That's Victor? That's
Yeah,
who I need
Victor's
to
our
find?
CEO.
I'll find
Yeah,
his phone
perfect.
number.
Perfect.
I'm going to call him. Why doesn't Sean have unlimited credit?
Yes.
With
Give me everything.
Why am I? Why do I not
Yeah,
have a guaranteed rate credit card?
Right. Who's going to pay for
They should start that. A
for the
gas
wagon
card.
wheel? Yeah.
100% for the
Yeah.
wagon wheel.
Yeah.
It's a water wheel.
Water wheel. Water wheel. Sorry.
David, stop looking at me like that. Not in the mood. So your goal then now is to buy more houses,
Yes.
and rent them.
Yes. Yes.
Okay.
But it's the pressure's
Well,
different
what are
because
you
now I have a
living
kid.
in now?
So my house is 5-bedroom,
Ooh,
3-bathroom.
California. That's a
My house is small,
1.7.
2,200 square feet on the money. So I bought it. We bought our house in February for $1,650,000.
damn.
Yep. It's worth $1 million.
1,650,000.
Correct.
Not
1 million.
1.6.
1.650 million.
You said 1,650,000, which would be
sorry.
$1 million.
That's the mortgage guy talk again.
Okay, 1.6.
One
and it's
million-
worth one?
It's worth 1.8 today.
Oh, no, it went up. Okay. You confusing
Which is
me with
stupid.
your math.
Which is stupid. It doesn't make any sense. It's just supply and demand, but it's the same things happening
The
here.
hell is the payment on a $1.6 million
Well, I
house?
sold a house I had for 14 years.
Yeah.
Right. So
So that
that
one
went
you
up.
probably
So
made some
again,
money
that's
on.
going back to the 25-year-old.
Yeah.
You buy and then inflation
Sit on it.
works
Yeah.
works in your benefit. Like my grandparents bought a house in Silicon Valley for $45,000 in the 70s, and it's worth like 2.5 now.
Oh my God.
We didn't do anything special, right? Same,
45,000.
but same grandparents would go, I remember when candy bars was a nickel and now they're $2. So that's nothing special happened. It was just inflation worked in your benefit.
Chilling. Yeah.
So inflation works well once you own real estate because
Yeah.
that's what's driving most of that long-term appreciation. So the earlier you get in, I would start with the multi-unit if I could.
Yeah.
It just, for me, I have an 18-year-old, a 13-year-old, a 3-year-old. One's going to college. I'm nervous.
Jesus, you got a gap.
I know, man. Surprise
What
ending.
were you two thinking?
Surprise ending. We were done. Surprise ending. But it's super fun. It's
Yeah.
a lot of fun. But yeah, I would start
Probably
early.
like it more now.
I appreciate it more.
Yeah. It's not.
Like I feel like I'm
in your
paying
20s,
attention.
You're like, ugh.
Yeah, I'm
what do
paying
you
attention.
want?
Yeah.
Here's some gummy bears shoe.
Yeah. I was like, I don't know if, I'm paying attention, which has been an interesting thing. Like I feel, much more attentive.
Yes. It's different.
Yes.
Damn. So but you don't like this house you're embezzling on.
What's that?
The current one.
Yeah, we love it. It's perfect.
Oh,
I'll be
you
there
like
forever.
it?
Oh, yes. It's
Really?
got, I'm stoked on
That's
it.
the forever one.
It's for a long time one for sure. It came with 8 chickens. I wanted chickens.
Does it have a pool? It has a
Yeah,
pool? Okay,
pool,
I mean
9 feet deep.
Oh man,
Pizza
I'm
oven.
staying in
Come
this
on
with
over.
you.
Brick
I'm
oven.
staying in this house.
Oh, it's great. I love
Pizza oven?
it. Pizza oven.
Fuck, I haven't had pizza in 5 weeks. Man,
That's
you
right.
just really hurt my
Sorry about
feelings.
that.
You can see it in my face.
Yeah, no, this is a good house. It was expensive, but like that's California, unfortunately.
Yeah.
So Austin's no cheaper now.
What'd you put down?
We did, I don't remember, 30%?
30? That's pretty good.
Yeah, 30.
That's,
And again, so that's where it's like, well, you know, if you sell a house and you have made all this money, because I bought my other house in 2004. And so I was 23, bought that house. You're paying down the mortgage, you're building equity. It crashed in 2008.
Yeah.
Came back.
But you waited.
Yeah. Came back. And then so you've built up this money just paying your rent effectively, right? Like I'm doing the same thing I would have been doing if I was renting. And then the money's so cheap right now, though.
Yeah.
It's like, are you better off moving it all into one place, or are you better off going, okay, well, if you could put it over in the markets over here, like make your money multitask, I think is what mortgages let you do, especially when the money's as cheap as it is right now.
Wow. What do you like about guaranteed rate? I mean, I've been hearing so much about them. Yeah. Like, obviously, they've been involved in a lot of things that I've been involved with. Yes. But, you know, from your expertise, what do you like about these guys? Because they're kind of new on the block, right?
No, so they've been around since 2000.
Yeah.
So I went there in 2018. I went there in June of 2018. So that's 3 years. Mm-hmm. I worked at another company that was same platform, but local, like where I live. I just like the culture. They both started at the same time, and I liked the culture of guaranteed rate. They were the second largest privately held company before Quicken went public. And I'm like, I don't want to go work for a big giant machine. And it's been awesome. Like it's a good company.
That's cool.
So, and now they're advertising like crazy. Like I saw yours next to ours at the 110 race. And I was like, we look good together.
Sponsoring. Yeah. They're sponsoring
everything.
The Triple Crown, all kinds of cool stuff.
All the motocross events.
It shows that their executive staff knows what they're doing when it comes to brand awareness in a younger crowd.
They're reaching the right demographic.
Yeah, they're going, hey, let's get younger people to buy houses.
Yeah. What's the Poirier, the UFC guy that fought McGregor? We sponsored that guy for that.
Really?
Yeah, we were all over that event. They're in everything. Cool. They're advertising like crazy right now.
That's awesome.
Yeah.
I mean, this has been incredibly informative. I think.
Thank you, my man. Thanks for having me.
I really hope we've helped somebody out there at least reach out to you. If you've never thought that you could buy a home, well, now you can. Or if you're a young military person that you're like, hey, let's try this multifamily thing out. Yeah. I'm liking the sound of that. That's going to set me up. By the time I'm 30, I could buy a boat.
Yep. 100%.
Oh, yeah. You get in a multifamily at 25.
You'll be good.
Start cranking that out. Pay that thing off.
Yeah. And again, to me, the what if is make sure the monthly payment's always comfortable, right? So if no one's renting and I have to pay this whole mortgage by myself, I'm good.
Fine. Yeah.
Silver lining is odds of that happening are probably slimmer, but I don't want anyone, I don't want the guilt of somebody getting over leveraged.
Yeah. That does suck.
Yeah. And if you're not sure how it works, just look into it. Like there's no harm in asking these questions to see if it is or is not the right time. To me, it's when I talk to people, I'm like, look, we're either going to build a buy now plan or a buy later plan. But either way, you're going to know exactly how it shapes up.
That's awesome.
Yeah.
All right. Well, go visit Sean at SeanHerrera.com.
Thank you so much.
Please utilize him for his expertise and services. This is great. Thank you very much for coming out here.
Thanks for having me. I appreciate it.